Hello traders everyone and welcome to our new webinar. Actually, I'm streaming this from my home because I had some issues with my internet connections back in office. So I hope that everything will run smoothly here. Now, before we can begin, just let me know if you can see my screen. I just clicked shared. So if everything is fine, is my microphone good as well here? I can see that Brian is here, Enes is here, so let me check if there are even more, some of followers. Okay, so looks like that we are ready to go. By the way, if you are a first-time visitor here on our YouTube channel, make sure also to check our website wavetraders.com. And by the way, we have this exclusive offer that will be available through this week, so you can get a taste of our services for one full month for only 20 euros. Okay, so you can get the full analysis that we cover on a daily basis. So if you will find this analysis useful in today's webinar, make sure to check this out. Okay, what's going on? As you know, the market has seen a pretty sharp sell-off into the Friday close. The US market collapsed, and the main reason was the bad US data, because even some of services PMI moved into contractive territory, meaning that whenever you have this bad US data and still high inflation around 3%, this signals like looks like a potential stagflation actually, and that's why the US yields, I mean stocks in general, are coming quite aggressively to the downside. Now, last time when I had this webinar, as you know, we said that we are basically tracking two interpretations for the 10-year US treasuries, and both suggested that US yields should come to the downside. So my first and primary interpretation still shows that we could be here looking for the third leg to the upside. So last week, we said that most likely this is just a temporary pullback and that we will be looking for a third push to the upside. So it can be a wave free of an impulsive recovery, meaning that there can be much more upside, especially if we can bridge these February highs. Now, the second wave count, the alternate scenario shows that this was only an ABC rise and that we should be aware of potential new reversal to the downside. So based on these two interpretations, we were looking for at least temporary move to the upside. And from based on that analysis, we said that dollar index could be looking for a move lower. So for now, we have seen a pretty nice move to the downside on the US dollar, and looks like that we could see even more weakness here, especially if the dollar will break 106.6. So this 106.60 is very important level for the US dollar, because keep in mind that basically when we are looking at this different interpretations on the dollar, we are basically at very important level. I still somehow assume that we could see a break to the upside here on the 10-year US treasuries, which would invalidate this bearish interpretation. This would be bearish for the US dollar. So this week will be very important, but maybe in the near future we could be chopping around here above 106 and below a 107 level, which is definitely a very strong resistance. But if we will start suddenly rallying back above 107.50, then I'm afraid that we will have to bring on this wave count, which is actually still my alternate wave count, but shows the potential scenario, valid scenario, with ABC drop and ending diagonal in C wave. So I definitely realize that if stocks will in the US continue to the downside, that the dollar somehow will find some buyers here because everyone will look for some safety and move into cash. So we could then be even looking for some rally here. But as I said, my overall view is still for the dollar for this year is still the dollar will come under pressure, but of course it would be much easier to confirm this weakness if we can start breaking towards 106. I mean below 106, which was our near-term target that has been triggered last week. Now looking at the euro dollar, as you know, we have seen some gap to the upside because of elections in Germany. So it was victory by Merz, and he somehow he has some similar views compared to Trump. Um, uh, Even Trump likes the idea that he won the German election. So I think that based on this news, even German DAX could be looking for a move to the upside because, as we know, he proposed even lower corporate taxes. He wants to change and stop immigrations, and he's looking for less regulations and to support the economy. So it looks like that's something that could be supportive for the markets. That's why we also have seen a gap to the upside on German DAX, and the euro dollar also find some buyers, but not for long. We have seen a reversal back to this Sunday gap. So again, euro, in my opinion, still could see move to the upside, but we are not breaking key resistance levels yet that should be cleared out for bullish trend to resume. 105.50 and then 106.30 are definitely important key levels. If you take a look here on this daily chart, we are still basically trying to bottom here around the 61.8%, but you can see that we are not moving anywhere above resistance levels yet, which definitely must be cleared out. So even on this one, of course, it's the opposite flip side to dollar index. Here we are also have this alternate wave count, which shows that what if this is an ending diagonal in wave C, especially if the US stock market would really try to correct even lower. And even German DAX, which gapped to the upside a bit, now moving sideways. In my opinion, even German DAX still has this ongoing correction. We are not at the wave 4 supports yet. Now wave 4 will usually retrace for the 38.2% of this extended wave 3, which is still a bit lower, and normally you will see that wave 4 will also try to move into the territory of a previous fourth wave termination point, which is at 21,000. But because this was fifth wave quite extended, I don't think that we will see at 21,000, but maybe just the starting point could be retested rather than the ending point of this fourth wave. So in such case, watch out for 21,800, 22,000. These definitely could be interesting levels. And the most important is, of course, that whenever you're looking at the subdivisions, it's good to have clear free wave drop before you may confidently look for potential price stabilization. And for now, that's not the case yet. And also, if you zoom in a little bit, you will see that that's still some gap here from this week's open that maybe still it's going to be filled, and then eventually we will see prices a bit lower for this wave C. So German DAX, in my opinion, is still bullish, but this pose, I don't think it's finished yet. And of course, this would make sense for S&P also then maybe to move to the downside. So what happened last week, as you know, we have seen a pretty strong reversal. What's the most important is that whenever you have this very bearish, after quite slow week, whenever you have this Friday very strong reaction, you can expect that at least Monday or Tuesday we will see continuation of this price, okay, because it takes a bit more time for markets investors to reposition themselves and to change this direction. So for now, I just think that there could be a bit more weakness, and if we suddenly see a break below 6020, then, as you know, wave 4 can either be transformed into a flat formation, okay, when you have three waves down for a wave A, three waves up for a wave B, and then you see a very strong and sharp sell-off for a wave C of a flat. In such case, the ideal support zone would be around 5,800. Why? Because that's still level back from November when Trump won the US election. So, as you know, if you were with us and watched our webinars at the start of this year, I've been highlighting and looking for this to be a key support level for the start of the year. I first thought that we will clear some stops below that here at the beginning of the year, but looks like that was not the case, in the market rallied back to these highs before it's now trying again to roll over. So if suddenly we see a bit more weakness, I still think that's going to be a very major support for at least for the first few months of this year. And I still think that that's correction, which it looks like it can be a bit of more longer in time, but sooner or later, of course, I will be looking for a resumption higher into wave 5. Now, the other scenario is also that maybe we can be still in some kind of a triangle here, because wave 4, if it's complex correction, could have a different patterns, and the triangle could also be one of the important price actions, especially if maybe support would be found around 5882. Why I'm looking at this level here on futures, as you can see, I've labeled it as a gap on the cash market, because whenever you look at the cash gaps, this appears to be very important ones, and I've been sharing this a lot in our Twitter channel as well, and you can see that's the gap. That is very big one here back from mid of January. So if we see a drop into that area, that would be the first potential support, and then the deeper one obviously would be that region when Trump won the US election. So I still think that we will see this bullish continuation, but for now that's not really the case yet. We are just posing here around. Now, what it maybe should be important if you're more like an intraday trader, to look and observe what will happen here on a smaller time frame. So it looks like that's a very strong drop that occurred here on Friday could actually be third wave. So what's the most important wave structure in Elliott wave terminology is whenever you spot the 5-wave movement. So if you see the 5-wave movement, if really market will continue to the downside today or tomorrow, and you see a retest of this 6,000 level, then this drop from that February highs will be seen in 5 waves. It means that market will certainly remain sideways in this higher degree wave 4, as I said, for a flat, possibly for a triangle. But the idea is that these 5 waves down will suggest and most likely will call for more weakness after any kind of a relief rally. If I'm wrong and market, let's say, will just move straight to the upside today and make this overlap with 6100, then I think that bulls will be back earlier, but still think that will be some kind of a triangle, but just more tighter one. So that's for the S&P 500. Regarding the wave counts, what is also very important maybe to observe and watch for is, VIX, known as fear index. We have seen some, if I zoom this in, we have seen some spikes here, but nothing similar to what to the levels that we have seen maybe here in December of 2024 or even of August. So it's much easier to call a bottom whenever you have these very strong spikes. And if you take a look at total put call ratios, it will be interesting to see if we can get these spikes similar to the previous readings, like here in May, August, that was also in November. So if we'll see this kind of a spikes, then I think that it will be, the S&P 500 would be much closer to potential stabilization around 5,800. So definitely I'm interested to see what will be the latest data here. Okay, now let's take a look also on some of other currencies. Now here we are looking at cable. I was looking for the support here at the start of the year, and now you can see that we are the pretty important spot and the price here, because notice that this is the free wave recovery at the potential channel resistance. So it's not easy for me to be smart here and say, okay, we are going straight to the upside or we are maybe going to the downside. I just want market to confirm one of the direction. I definitely am not smart enough to be always right, but it was much easier for me to identify this recovery a few weeks back. But now it's a bit of a decision point, which unfortunately will need a bit of more time, but I think that by the end of this week we'll have more clue of what is going on, if really we are bottom here, or maybe, who knows, maybe even we'll try to roll over. But overall, I think that that's the whole price action here on cable is corrective, and that sooner or later bulls will be back. But at this point, I think that at least in the short term, it's a bit tricky to say if that will happen from here. But if, let's say that by the end of the week we are trading around 1.28, then I would be quite certain that that there's more bulls ahead. Now here I'm looking at dollar Swiss franc as well. As you know, a few weeks back I said the dollar Swiss franc is on the sideline. I have it on also just watching it with one eye, because I was bearish on the US dollar. But now when we have these levels, very key levels on dollar index around 106, and if we suddenly would see dollar moving to the upside, if stocks would really correct even lower, then I think the dollar Swiss franc could be very interesting for more potential strength. So watch dollar Swiss here around 0.950. If we can break this level, then I think that there can be still a push back towards these May highs. Okay, so only if we'll have this dollar trend that will resume, that dollar bulls will be back, then dollar Swiss franc would be on definitely on my watch list. Okay, now even if we take a look on the dollar yen, we covered this one quite a lot recently, and notice that last time I said that dollar yen is probably headed down for this wave C, okay, that belongs to a complex, to final parts of this complex correction. But notice that this drop now from wave X is actually in 5 waves, okay, not in 3 waves. So if we think that we are in a 7 swing correction here, the complex one, then obviously I would anticipate even more weakness. But again, after wave B rally, because we can count 5 waves down right into this December support. So maybe some stabilization in the near term for a wave B rally, and then watch out for more weakness. So even this one, which has been pretty weak, shows now that we could have some temporary support down here, okay, with this blue cycle of the lower degree, okay. Resistance in such case around 150, 151, even more important, and then you have this channel resistance. Only break above this upper trend line of this downward channel would likely suggest that wave B is coming to an end, and obviously now that's not the case here. Now let's take a look also on crude oil. As you know, I've been looking and have been bearish on crude oil for a while, and looks like that there's still room for more weakness, especially if these negotiations to stop the war in Ukraine will be successful. Then obviously energy will see even more lower prices. We can already see move into this direction, possibly after completing this running flat here for a wave B. And that's a pretty strong sell-off. I think it's an impulse, and watch out for potential $68, $67. That would be ideal super zone for wave C. You can see that there was a lot of noise around that area, so maybe it won't be an easy breakthrough, especially if you look at the daily chart and just realize that here we have this ongoing triangle still incomplete. That's an A, B, C, and we are expecting wave D. So around $67, $68, we could see some stabilization, then wave E rally, and then sometime this year I would be expecting lower prices here. Now let's take a look also on gold. As you know, gold is in a recovery mode. I think that it can be trading in a higher degree wave 5, and wave 5 should still then be structured by 5 waves, and that's not really the case yet. So I think that after some pause, which could show up in the next few weeks, I think that that's when wave 4 could develop, and we obviously could expect more upside. But if you're looking for some setups on the long side at this stage, well, keep in mind that it can be a bit late. Also, you have some wedge formation here, potential ending diagonal, which means that there can be limited upside, and maybe that's the one that will trigger this potential pullback for a wave 4. So if you're looking for opportunities, you either wait on this ending diagonal, and then some that are contrarian traders will maybe seek for potential opportunities on the short side whenever the lower trend line is broken. Or if you just want to be involved on the long side, then I prefer to wait on this wave 4 dip with the first support around 2850, but much more important one could be the previous high here around 2800. Okay, now let's take a look on some of stocks. By the way, guys, if you're a first-time visitor here, just if you didn't do so, make sure to like this video so that we will be listed higher on YouTube channel. Okay. Now let's take a look on nvidia. And last time I showed you one wave count, which is actually showing that this market, it's here. This market still did not complete an uptrend because of an ending diagonal that has a missing fifth wave. But I said that there can be some resistance. Firstly, we were looking for this gap to be filled around 142. This has been the case, and normally, as you know, these gaps, whenever they are filled, can cause a very important reversals. And we have seen some pullback now, and I think that subwave B could show up here, so it means slightly more sideways price action before market moves even higher. And keep in mind that we have this nvidia earnings on Wednesday after close. As you know, nvidia earnings always very important because everyone is watching, and it will have important, maybe data will be important, and the reaction will be important to the whole US stock market, especially technology sector, not only nvidia itself. So what's important to realize that expectations from nvidia are increasing each few months, and even if data comes out better than expected, like in the last 2 times, we have still seen market reversing to the downside. So keep in mind that even if we get strong data, maybe still we will get this deeper wave B pullback before maybe dust will settle, and then market will move to the upside. The another wave count, it's not only ending diagonal, it's also potential triangle, the running one here that shows potential chances for a wave 5 rally. And even this one shows missing wave E. So even this one shows that there can be some deeper pullback. It's not something that is guaranteed here, but it's definitely the patterns, the whole patterns in structures since end of last year shows that we are still in the middle of these consolidations, and that at some point we should see new highs, but maybe not straight from here. I think that there is a chance to see some pullbacks, especially if the S&P 500, as I showed you earlier, is also in this, is still going to make this wave for a bit more longer in time, or at least complex in price. Let me just check some other stocks here on my list. If we take a look on Meta, this one also looks like that could be stepping into the wave 4 correction. Still, it's a bullish trend, but just another pose within this uptrend. Maybe something similar could show up like we have seen here through July of 2024. Maybe something similar could be here as well. So even if we see 640, 620 area, still would be good enough for this wave 4 to unfold. Take a look on McDonald's as well. Last time we said that we had this free wave retracement, very nice fill gap, reversal to the upside. We broke out of this channel. We moved and almost closed this gap back from not previous, but from earnings of at the end of 2024, basically in October or November. So what happened? Well, we are seeing now another retracement to these gaps from earnings that was here on from what 2 weeks back. So maybe this gap, unfilled gap around 295, could be very important for potential price stabilization and new push to the upside. So I still think that this one is looking quite good, and definitely I would not be surprised if we see a print of new highs here while the market is trading above 276 area. Let's take a look also on Apple. This one is a very important potential resistance zone. Keep in mind that that was a very strong sell-off, and this could be now seen as a free wave recovery into the 78.6%. So definitely very important level. Very interested to see what will happen up here if we try to roll over and go back towards below 230 to 35 area. Then I think that we should be aware of more sideways or at least lower price action as well. When I look at this price action, it's definitely the wave structure that I don't want to look for potential buying opportunities. You are rather just leave it on the side or just waiting on better support levels to be reached. Now, semiconductors here as well. We have seen some gaps that have been filled here back in January. Okay, if you look at these gaps from summer of 2024, then we reverse to the downside. A new gap has occurred, and now also trying to roll over away from that gap. So it really doesn't look good, at least for the short-term bulls, unless that's the whole price action going to be some kind of a triangle here. Okay, then that's the different story, but at least whole price action here doesn't look like the price wants to go higher. I just think we either just going to the right here or possibly even will break lower into wave C. So the question is what all this means for cryptocurrencies. Maybe the cryptocurrencies will stay in a correction for bit longer. We can see even MicroStrategy still trying to retest these lower support levels from December, the beginning of January. So that's still a very big support for this wave 4. I think that cryptocurrencies generally will recover, but maybe it will take a bit longer before they may finally break to the upside, because obviously it's not easy for cryptocurrencies to continue higher whenever you have stocks moving sideways. So if you're frustrating yourself because of cryptocurrencies still making very big dips or just moving sideways, that's because you have stocks, especially the technology sector, that is not breaking out yet. In fact, you can see this correlation here, and the Nasdaq 100 is still basically back in midpoint of this consolidation that is now since December 2024. But I like the fact that Bitcoin cryptocurrencies are still trying to hold the levels that we have seen here back in February tested, that are still holding above that level. So overall, I would not be surprised that cryptocurrencies will resume to the upside, but maybe we are not at that point yet. Maybe that's still just we are in the middle of this potential triangle that can be unfolding here on Bitcoin. If we take a look on the Ethereum, I'm again still looking at these gaps and futures. So as you know, Bybit has been hacked, as they said on Friday, but looks like that clients will not be affected. So it was not a big deal actually for the Ethereum itself. We have seen just what 5%, maybe a slightly bigger pullback here, but still in this range. So this still looks like a correction, and I would not be surprised to see a push to the upside as long as we are holding this level. Also notice that we had erased the previous losses completely. The spot market, as you know, has seen a recovery through the weekend, then futures gapped higher. But now what is happening? Well, the futures are trying to fill this gap. So maybe that's going to be the next interesting support. And I still think that at some point, market will be hunting this higher unfilled gap from the beginning of the year. And overall, looking at the wave count here, as you know, I'm looking for this potential completion of a very big triangle. So still, maybe alt season will show up, but it won't be easy whenever you have stocks in retracement. So even Ethereum obviously could stay sideways here, but overall, I am expecting this one to trade higher in a few weeks. Looking at Ripple, this one is also neutral. Looks like an ongoing consolidation, and these are poses that are very healthy because longer is pose, much more stronger can be the break to the upside, right? So if some are trying to trade this with some leverage positions, as you know, whenever you look at this kind of formation on a smaller time frame charts, well, the traders will be very frustrated when they are not seeing the breakout, and it's the same thing on a higher scale as well. So I think that traders sooner or later will give up on Ripple, and whenever that will be the case, that's when I would be expecting a resumption higher. And by the way, we are still then just in the middle of this potential ongoing ABCDE triangle, but there can be some very nice support around these levels date back from February 7th. So that's around 2.26 cents. So this is quite interesting for potential some stabilization, maybe still this week. Now, today I also want to look at Solana. As you know, this one has been crashing lately, and I have been covering this one in webinar a few weeks back when I said that we are most likely going to complete this 5-wave rise for wave 3, or either we are even having a wedge pattern and ending diagonal. And so far we can see a pretty strong reversal, and if you will go to the smaller time frame, you will be able to count 5 waves down from that highs. So I think that we are now in a corrective territory, and there will be some relief rally, I think, but it's not the wave structure where you would be looking for potential buying opportunities, at least not from an Elliott wave perspective. I think that much better opportunities will show up whenever you have this now ongoing pause, maybe through the next few months, and definitely we want to have 3 waves to the downside in wave 4 before you may look for some new opportunities there. Now, what I have here is also short-term holders on Bitcoin. You can see here that values above 1 indicate that more short-term holders are selling at a profit. Below 1, it means that more short-term investors are selling at a loss. And so far we are below 1, but not really a lot of losses here. So if we suddenly see more weakness on cryptocurrencies and Bitcoin, I think that then it's good to observe this data and how many losses will be seen then on their short-term holders, because it may help us to identify for potential bottom, especially when we'll have some potential, some spikes like here presenting these values. So for now, that's not the case yet. And if suddenly something happens on the downside on cryptos, I think that this maybe would be important data to track to identify the key support levels. Also, if you look here at net unrealized loss, so this one is very similar, and you can see here that we had some very interesting aggressive spikes, which basically occurred whenever we bottomed on Bitcoin, but now we are just somehow going sideways, not really seeing any kind of a temporary spike. So still just another chain data which may help us to identify the potential bottom on support on Bitcoin whenever, if we will have a new sudden dip. It would be much easier basically to identify potential price stabilization, in my opinion. Okay, traders, that was our webinar for today, for this week. I hope that you enjoyed this content. And again, thank you for everyone to being in this webinar each Monday. It really helps us to grow. And by the way, if you're not our member yet, we have this special offer going on. You will get constant updates, intraday charts, daily basis through the course of the week for 20 euros whole package. FX, cryptos, of course, we cover also crude oil, German DAX, S&P 500, and other important markets. Okay, traders, Thank you again for being here and good luck this week. Bye.